Ethiopia is one of the fastest growing economies in the world today. It's recently moved from a publicly controlled economy to a privately market economy. It has the second largest population in Africa. We're going to be talking about the Ethiopian debt, the economy, some of the financial issues they might be dealing with, to give you an idea on what Ethiopia looks like. Ethiopia was one of the only countries in Africa that wasn't really seriously colonized. The only threat I could say of colonization of Ethiopia was maybe Italy. Ethiopia has put together 3 5-year plans to grow its economy. 5-year plans are government-controlled economies. Rarely do they work. The first 5-year plan was from 1957 to 1961. It was to build out an infrastructure and incorporate a new constitution and invest in education and communications. The second 5-year plan was from 1962 to 1967. It was to industrialize its agricultural economy. And the third and final plan was from 1968 to 1973, which was to build manufacturing and agro-industrial promise to Ethiopia. But in 1974, there was a revolution that resulted in nationalization. In 1991, there was reform. There were civil wars. When the United States closed its base in Ethiopia, it had tremendous impact. You're dealing with an area that suffered from famine and political problems. If you like the video, this is a good time for you to subscribe. The products sold in Ethiopia is mainly coffee, forest products, oil seeds, potatoes, sugarcane, live animals, leather, chemicals, gold, flowers. They also export electricity to Kenya through the Grand Ethiopian Renaissance Dam, which processes 20% of the electrical power in Ethiopia. The country suffers from an extremely high poverty rate of 70%. Garment manufacturers and that type of labor is prevalent in Ethiopia. To give you an idea on how Ethiopia sizes up against other economies, there's something we call gross domestic product, which is the way you measure the growth or the healthiness of an economy. What the gross domestic product is the total number of goods and services a country makes less imports. And this is going to give you an idea on where Ethiopia is at. Ethiopia's gross domestic product is $1.3 billion. The United States is $27 trillion. And China is $18 trillion. I'm sorry. But that doesn't tell you much until you know how that's dispersed. In Ethiopia, each person of that 163 billion gets $1,300. In the United States, of that 27 trillion, each person gets $63,000. And in China, of the 18 trillion, each person gets 13. So Ethiopia does not have that good spread when it comes to equality. There's another way that equality is measured. It's called the Human Development Index. And what that does, it incorporates education, life expectancy, knowledge, living standards. Ethiopia, out of the 193 countries in the world, finishes 176. The USA finishes 20 out of 193, and China finishes 43. We talked about rating services. When you have to refinance your loans, a rating service like Finch is almost like your credit rating. If you have bad credit, you're going to pay more. Ethiopia has a CCC credit rating. The United States is A+, China's is A. That is worse than junk bonds, which means if Ethiopia, when they refinance their debt, they're going to pay a lot more. Ethiopia has defaulted on its debt before. And it ranks 146 out of 193 as far as free economy. The problem there is going to be, how long can the government stay in a free market economy? That's the key. If you like the video, please give me a thumbs up and please subscribe and have a good day. That's it.